A very good morning to you. Thank you for joining us on Business Morning. I am Bisi Adebayo. We'll begin with crude oil prices, which are back below $40 per barrel today after a sharp decline on Tuesday as a rebound in COVID-19 cases in some countries undermined hopes for a steady recovery in global demand. Brent crude was down at $39.73 a barrel in early trade after dropping more than 5% on Tuesday to fall below $40 a barrel for the first time since June. U.S. crude was also down at $36.70 a barrel, having fallen nearly 8% in the previous session. Now, both major oil benchmarks are trading at around 3-month lows. The global health crisis continues to flare unabated, with cases rising in India, Great Britain, Spain, and several parts of the United States. And analysts say that the outbreak is threatening hopes for a global economic recovery that could reduce demand for fuels from aviation gas to diesel, although the price slump could lift refinery profits back into positive territory. And record supply cuts by OPEC Plus have also helped support prices, but with grim economic figures being reported almost daily, the outlook for demand for oil remains bleak.
If you are not seeing other marketers coming into importation now, participating in importation, is because everybody is still understanding. Because if you go into investment, you carry out your analysis and they are still understanding the market to see how best they can key in without actually losing. And usually with a new system, there's always what? Skepticism. So obviously, like the exchange rate, this year has been a difficult year, not only to Nigeria, even every economy because of the pandemic. When you are not, producing as you ought to do, when you are not earning foreign exchange as you ought to do, then there will be so much pressure on the little that you have, and that is why you can see the galloping in the exchange rate. We do not expect that it will be like that forever. Definitely, you can see government putting so many things into play, and then we hope at the maturity of all the thinking that government has been doing, and then the drive that government has been doing to expand, to open up the economy. The exchange rate we are seeing today would definitely dip down, and you can start seeing appreciation in the naira. When there's appreciation in the naira, of course, it will also affect virtually every sector in the economy.
And that's the PPPRA talking about the fact that private marketers will now have the liberty of fixing pump price of petrol under the deregulation regime as the regulatory agency hands off the function. Now, the agency says that its roles has changed from price fixing to the policing of the petroleum downstream and other industry-wide programs. And in other headlines now, the Economic Community of West African States has postponed the planned launch of its single currency, the ECO. The body, in a communique issued at the end of the 57th summit of the heads of state and government of ECOWAS, agreed to maintain a gradual approach for the launching of the currency. This also follows the earlier caution from President Muhammadu Buhari that the program could be in serious jeopardy unless member states complied with agreed processes. Among other things, the program has been postponed in order to consolidate ECOWAS achievements, while the new roadmap is expected to be developed for the initiative with a subsequent launch date. Now, the central bank has reacted to a series of allegations from the Nigerian Economic Summit Group, stressing that the review of the Banking and Other Financial Institutions Act does not seek the independence of its governor. In a statement issued as a response to NESG's claims, the CBN says its array of its interventions have played critical roles in stimulating the economy through agriculture and other areas since the COVID-19 pandemic outbreak. The regulator also defends its venture into development financing, attributing the motive to the need to improve livelihoods and trim poverty rate in the country. The latest report on the CBN's website further shows that over 59 billion naira has been disbursed to over 103 beneficiaries in various credit facilities through Nestle Microfinance Bank as at August 2020, and noting that expansive due diligence is carried out on all loan applications before disbursal. The CBN maintains that its current structure of forex sales across the two main windows is more than transparent for the nation's currency management. Well, once more, let's talk about the latest developments coming from the crude oil markets. Of course, Brent crude is back below $40 per barrel today, and that's coming after sharp declines were recorded on Tuesday, and that's caused by a rebound in COVID-19 cases in some countries, which has undermined hopes for a steady recovery in global demand. Brent crude was seen this morning at about $39.73 a barrel, after dropping more than 5% yesterday, falling below $40 a barrel for the first time since June. U.S. crude was also down at $36.70 a barrel, having fallen nearly 8% in the previous session. Both major oil benchmarks are trading at around 3-month lows. The global health crisis continues to flare unabated, with cases rising in India, in Britain, in Spain, and several parts of the United States. And analysts are saying that the outbreak is threatening hopes for a global economic recovery that could reduce demand for fuels from aviation gas to diesel, although the price slump could lift refinery profits back into positive territory. Record supply cuts by OPEC Plus have helped support prices, but with grim economic figures been reported almost daily, and the outlook for demand for oil continues to remain bleak. Now let's get into our conversation. Now, the World Trade Organization, through its trade facilitation framework, opened a memorandum of understanding with its members in 2013 with a view to further reduce barriers to trade and harmonize documentations in relation to customs, immigrations, and other administrative procedures. Nigeria, as a signee to the Trade Facilitation Agreement, has been reaping the benefits of ratifying this agreement, including contribution to the strategic national objective of ascending in ranking of the World Bank Ease of Doing Business. While significant steps have been taken to implement the agreement in Nigeria, there are still some challenges that are limiting the progress of the Nigeria Trade Facilitation Roadmap, which aims to foster competitiveness before the 2022 deadline. But for this and more information about the implementation of the Trade Facilitation Agreement in Nigeria, we're now being joined by the Director of Trade Nigeria and the Chairman of the National Trade Facilitation Committee, Mr. Abubakar Aliyu, who joins us from our studio in Abuja. Good morning, Mr. Aliyu. Thanks for joining us on the program. Can you give us a background into how the TFA came up and how Nigeria has progressed since its inception?
Thank you very much for this question, and it's a pleasure having me here. Just to give you a background on the World Trade Organization Trade Facilitation Agreement, it is an international agreement that was agreed to by WTO members in 2013 at the 9th WTO Ministerial Conference in Bali, Indonesia. So members agreed to have the agreement to serve as the basis for improving trade among WTO members. So currently, the agreement came into effect in 2017, and Nigeria is one of the original members of the Trade Facilitation Agreement. So, and as you know, all the 164 members of the WTO are also signatory to the agreement. So we are there, and the agreement has entered into force.
Now, what's the mandate and the vision of the National Trade Facilitation Committee?
Okay, thank you very much. The mandate of the National Trade Facilitation Committee is to ensure the implementation of the WTO trade facilitation. And that is intended to achieve two basic objectives: making sure that at the national level, all programs and policies on trade facilitation are implemented to make the environment easier for trade. So that is one key objective of the trade facilitation. It's not just an international agreement, but it also enhances or improves the trade facilitation within the country. Apart from that, it is also intended to ensure that we meet all the international commitments arising from the agreement. So the agreement has two basic objectives, national and international. And that is the main objectives and the goal of the trade facilitation agreement.
Now, you've talked about the objective of the agreement, but then what benefits do members like Nigeria stand to derive from implementing the agreement?
Well, there are so many advantages to be derived from the agreement. One, it will reduce the time of trading and doing business. It will also reduce the cost of doing business, which is a major barrier. So apart from reduction of time and cost of doing business, it is also expected to promote transparency, accountability, and stability in terms of ease of doing business. It will also simplify and harmonize all the processes of trade procedures, and that is key because when things are simplified and harmonized, things are done much easier than if they are not harmonized. So these are some of the advantages, and apart from that, it will facilitate free flow of trade, which will lead to increase in revenue as well as growth in terms of trade. So it's expected to bring advantage to the country and also the international community. Members through the agreements will be able to trade more among themselves. So there are quite a number of national and international benefits that members derive from the trade facilitation agreement. It is actually a win-win agreement for everybody.
Now, the committee has taken steps to implement parts of the agreement. So tell us, what are your achievements and the low-hanging fruits, or what are your achievements and the low-hanging fruits at the moment?
Well, we have been able to achieve a lot. We have interfaced and with a number of stakeholders, ministries, department, agencies, and other stakeholders. I'm talking of the private sector, to ensure that we work together to ensure that we implement all the measures prescribed in the agreements. And we have visited ports and other entry points and have handled quite a number of complaints, and they have been addressed both before COVID and during COVID. So the trade facilitation agreement has ensured that addresses or complaints and issues arising from trade are adequately addressed. So that is there, and we are working in collaboration with all members to ensure that all complaints and all issues are addressed for free flow of trade in Nigeria, and as well as trade between Nigeria and other countries.
Now, going back to the committee now, how have you intervened in cushioning the negative effect of a recent outbreak of a coronavirus pandemic on trade generally?
Thank you very much. The committee, in response to COVID, has done a lot, and that has been done through the ministry I will start with the Federal Ministry of Industry, Trade and Investment. As a result of the outbreak of COVID pandemic, the ministry established emergency operations center to ensure that production and distribution of essential goods, including food, drugs, and other products that are necessary to address the COVID pandemic was not disrupted. So the Emergency Operations Center was up and doing. It intervened on a number of issues, and it was able to link up with the Presidential Task Force on COVID-19 to ensure that any hitches and impediments to free movement of food, drugs, and other essential products needed to address the pandemic were resolved. Apart from that, the ministry has set up trade information portal, which is up and running, so members of the public can key in and get the necessary information, including those related to COVID. But apart from the ministry, I have to, I can also inform you that other related ministries, departments, and agencies have also taken measures on their own. Like the Standards Organization is a member of the committee, and it has facilitated expedited waivers on SONCAP certification. It has also provided free test analysis for essential goods in Standards Organization laboratories. So apart from PAN, apart from SON, other agencies like Ministry of Aviation and the Federal Aviation Authority of Nigeria have also taken steps to respond to the COVID pandemic through aircraft and airport disinfection, training of aviation workers to handle COVID cases. Measures have also been put in place to ensure social and physical distancing at the airports, as well as continued public enlightenment and provision of protective equipment to airport workers. NAFDAC too has done a lot as a member of the Trade Facilitation Committee through the online registration of essential products and expedited registration process for essential products. Shippers Council and so many agencies have responded to the COVID pandemic in such a manner that the effect of the pandemic is mitigated as a result of their actions. So we work in coordination and collaboration, and we are also linking up with the Presidential Task Force on COVID-19 to ensure that we have a coordinated response on COVID-19. So, and we are still working, and we hope that the pandemic will soon come to an end, and normality, things will normalize, and there will be more free flow of trade within the country and with other countries of the world.
Everyone is definitely looking for the time when, of course, all of this, the COVID-19 pandemic will come to an end. But hold on to your thoughts, Mr. Liu. We'll be coming back to you shortly. Well, the program continues in just a moment. Please stay with us. Welcome back. We're still talking about the Trade Facilitation Agreement, and we still have with us the Director of Trade Nigeria and the Chairman of the National Trade Facilitation Committee, Mr. Abubakar Aliyu. Thank you for staying with us, Mr. Aliyu. So let's continue the conversation now. Tell us, how significant is the TFA for the Africa Continental Free Trade Agreement takeoff?
Thank you very much. The Trade Facilitation Agreement is very essential for the takeoff of the African Continental Free Trade Area Agreement, which, as you know, was supposed to come into effect in July, but had to be postponed or rescheduled to January 2021. because the provisions of the TFA is applicable to all countries, including members of the African Continental Free Trade Area. So members through their, they are expected to adopt the provisions of the agreement and implementing them to make sure that trade among African countries is improved and is enhanced. So there is a clear link between the TFA and the implementation of the Continental Free Trade Area. Most of the members of the CFTA are also members of the World Trade Organization, and they have taken measures at national level and at regional level and at continental level to ensure that the TFA enters into effect in January 2021. So the enforcement of the provisions of the TFA is expected to give a significant boost to the implementation of the African Continental Free Trade Area in 2021. Just to tell you, within the West Africa region, we have a program on trade facilitation West Africa, and members have taken measures by ensuring that trade is facilitated within the region. And members of other regional groupings too, they have taken measures to ensure that they trade more among themselves as a result of the provision of the TFA agreement. So when you look at all these efforts, the effort at national level and the effort at regional level and the efforts at continental level, it will actually help and complement the provisions of trade facilitation in the African Continental Free Trade Area. So the TFA is actually key to the implementation of African Continental Free Trade Area, which will come into effect in January 2021.
All right, just before I let you go, Mr. Leo, what are the means to contact the committee in case of any information or inquiries?
Okay, we have our own structure, and we have the main committee itself, the National Trade Facilitation Committee, which is domiciled in Federal Ministry of Industry, Trade and Investment. We have the Secretariat. Then we have also the different working groups, 6 of them, handling different issues on trade facilitation. And we also have a hotline or a line that you can call to complain or to report any issue, infringement on trade facilitation. So we have a structure in place, and members of the public are free to contact the hotline and the Secretariat of National Trade Facilitation Committee to ensure that if they have any issue or they have any complaints or any suggestions, that can be properly handled and addressed by the National Trade Facilitation Committee. And we intend to improve and to deepen the structures and the coordination to ensure that we do the best we can to ensure that trade facilitation is enhanced in Nigeria, and that will not only complement the ease of doing business program of government, but will also ensure that Nigeria implements all the commitments arising from the trade facilitation agreements. Thank you very much.
Thank you. Would like to thank you to the Director of Trade Nigeria and the Chairman of the National Trade Facilitation Committee, Mr. Abubakar Aliyu. Thank you for coming on the program.
Thank you very much.
Time now to review the numbers from yesterday's trading session at the Nigerian stock markets with Temple Ashaju. Good morning, Temple. So it was another day of declines at the market yesterday. What is really happening?
Well, a lot of profit-taking busy is what is happening. Again, you know that these whole markets locally are patterned after the oil price that we have in the global stage. And if you recall, lately, as you reported earlier, they have the price of crude oil has actually been dilly-dallying lately, and that's what our market is reacting to. But primarily because, again, we've been seeing a whole lot of profits taken in the market. So basically, yesterday we got a decline of some 0.33% in the markets. This is something that is a reaction basically to the digestion of the earnings from tier 1 banks like GT Bank, which was down the most yesterday by a whopping 6.18% in the market. And of course, coupled with the numbers that came in from UB and Union Bank of Nigeria, which was also a bit of a decline, 3.something% yesterday. All of that puts together impacted the market. Again, you have some folks that have actually bought the likes of Zenith Bank, JT Bank, and of course a couple of other banks, earlier when the prices were lower, as low as some 17 naira for the likes of GT Bank, 21 naira. And so when the earnings came out, coupled with the fact that the company actually declared some dividends, it was time for them to edge out of the market. So that is something that the market is reacting to, and that's the reason why we saw this level of decline in the market yesterday. We also know the volume of transaction was marginally down. Yesterday was down by 1%. Of course, yesterday I should add basically that MTN, which is a major telecom sector and of course the largest by capitalization, contending with Dangote Cement in the market, was even up yesterday by some 0.7%. We saw some increase as well and interest in Nigerian breweries and a couple of other major stocks that we have in the market. But all of that weren't able to help the markets keep its head above water. Was a decline yesterday. Value of the transactions in the market was down. Of course, the volume of, if you look at volume again, it's as a result of the 193 million units of shares traded over Custodian Custodian Investments Company in the market yesterday. That was the most actively traded stock in the market. So when you put all of that together, coupled with what we saw on the banking space yesterday, it was a decline. Now, but if you look at other aspects of the markets, consumer goods side of the market was positive. We saw some buying interest here yesterday in some of the key stocks. I think Guinness was a major gainer yesterday as well. Industrial space of the market too was positive, even though it was a marginal gain, some 0.01% on that space. That is something that we also need to keep watching, again, because Boa Cement has declared some dividend and is expected to make the payment, I think, either later this month or early parts of October. But if a qualification date for that company is already passed, and that's why we saw a huge volume of activity on the company sometimes in August. Insurance space was up yesterday, and of course, oil and gas also closed positive in spite of the decline that we have on Japan, which is marginally down yesterday. But we have Mr. David Adonri, who is a trader with High Cap Securities, joining us on phone now. Okay, I understand we don't have him yet. There's a bit of network issues there. But let's look at the unlisted securities market, where things were down again yesterday. It's 0.69%. And of course, we have the market capitalization now costing up to 529.29 billion naira. Lately, we've seen a lot of transaction in this space because, again, there's been so much of rebalancing, portfolio rebalancing and rejigging by a lot of investors that play actively in the capital market. So when you see the stock exchange and of course the equities there, going beyond their the level where you expect them to be, and it is difficult for you to make entry. Where you go to is the NASD OTC. This is one market that has some major companies as well tradable on its platform. We know that recently the Pension Commission was able to admit for trading the NASD OTC. So we have a bit of institutional participation on this side of the market at this point in time. Busy, I think I should hand over to you now so you can continue for the rest of the program.
Yes, indeed, Temple. But of course, we'll be getting back to you much later to review the debt and currencies market.
Sure.
In the meantime, let's continue our conversation. And this time, lately, the central bank has been rejigging its monetary policies around the foreign exchange controls, as well as the debt management and recovery strategies across the banking industry. And that's all in a bid to stimulate the economy and also reduce the pressures of the COVID-19 pandemic on Africa's economic powerhouse. Although analysts seem to be divided on the objectives of these monetary policies, the considerations of the banking community and other financial services leads to or is yet to be heard. And joining us now to bear his mind on these developments and other matters arising across the financial services sector is the president of the Chassid Institute of Bankers of Nigeria, Mr. Bayo Olugbemi. He's joining us via telephone. Mr. Olugbemi, thank you for joining us on the program. Good morning. Now, let's have your assessment of the state of the banking industry today, considering the impacts of the COVID-19 pandemic on the half-year performance of the banks.
Sorry, can you please come again?
I was asking for your assessment of the state of the banking industry, considering the impact of the COVID-19 pandemic on the half-year performance of the banks.
Okay, thank you very much. Yes, the COVID-19 pandemic caught everybody by surprise. However, the fact that most of our banking institutions had always been on, they've done a lot of work on online services, digitization and the rest of them. It makes it very easy for them to adjust. So I won't say we were that badly affected. Yes, we were affected as the banking industry was affected too. However, because of the fact that we have what I call adjustment mechanism and the fact that we have gone digital over the years, made it very easy for us to adjust to the realities of COVID-19. And also, some of the palliatives and the incentives given by Cibn to the real sector through the banking industry, that is the MSME funding, the health sector funding, that comes at 5%, 9%, which is a single digit, has also gone a long way to actually help the banking industry to stay afloat and to be able to serve their public.
Well, having said that, Mr. Olugbemi, a greater part of the first half of the year was characterized by CRR debits apart from the statutory debits. What do you make of such headwinds?
I think what CBN is trying to do is to stimulate the economy and in a way encouraging, if I may use that word, the banks to lend to the real sector, the agri sector, the real sector, the manufacturing, and the rest of them. So if they are unable to meet the threshold, that was the reason for the CRR. But I believe in the long run, everybody will be better for it. The economy, the industrialists, the manufacturers, those in the agri sector, and everyone at the end of the day. Yes, it may be very tough for the bank and the bank and the bankers in the first place, but by the time they adjust to the reality and they begin to lend, of course, you are not lending free of charge. There are incomes that also come to you as a banker.
Well, recently, the CBN also reviewed the minimum interest rate on savings deposits to 10% of MPR, and that move was very recently described as price fixing. Is that what it is, actually?
I think the purpose for that is to also reduce the lending rate. Yes, for the banking public, those who have money in savings account and the rest, it may not be very good for them because it means they are getting lower interest rate. But then, if you look at the flip side, with the reduction in the interest in the savings rate or savings deposit rate, to also bring about reduction in the lending rate to consumers. So I think it's in the best interest of the economy.
And now that the CBN has commenced sale of foreign exchange across the different wholesale and retail windows, at what rate do you see the dollar to the naira?
Difficult to call, but I think we started seeing the impact, especially in the parallel market. The price is coming down, but I do not pinpoint the rate at which the naira will settle. I can't. It's difficult to call.
But are you optimistic that the exchange rate regime will eventually see some unifications as demanded by the multilateral financial institutions?
I believe so.
Okay, so speaking of a review of the Banking and Other Financial Institutions Act, that's the BOFIA, How significant is the review of that document for the financial market?
You call it review. It's still under review. Yes, it's been submitted to the National Assembly, and the copy I saw that we as CIBN also had input in, I think to a large extent we addressed some of the shortcomings that was discovered in the current buffet.
But are you of the opinion that the review aims to confer immunity on the governor of the central bank, like what obtains for state governors?
I don't think so. Immunity? How? How do you mean?
No,
It's just to strengthen the CBN to do much more than they are doing now, not any immunity per se.
Okay, let's talk about the role of the CIBN now in the banking industry as it relates to capacity building. What form of support are you offering?
As CIBN, our major reason for existing is to train and retrain and make sure that our members are skilled and they work as professionals. Over the years, we have a flagship certificate called the ACIB. But much more than that, from time to time, we hold knowledge sessions whereby we share experiences and we bring a lot of people from all over the world and in different sectors to come and talk to our people. But recently, we also reviewed our syllabus to be of international standard with any other institutes in the financial space. For example, the CFA, the Institute of Bankers all over the world. And we didn't just do it in-house. We brought in PwC to assist us in getting the syllabus reviewed. So our current syllabus is can stand side by side with the syllabus of all other institutes within not only Africa but all over the world. So with that, we hope that our members will be properly skilled, and we of course we have introduced other subjects like digitization, like green banking, like public sector accounting, like MDGs, that's development goals, SDGs, and sustainable development goals. So, what we call sustainable banking. So we have introduced a lot of standalone certifications, and even in our flagship and our training to ensuring that our members are up to date in their professional calling.
All right, so how well are you engaging with the monetary and fiscal authorities to ensure that there is an enabling environment for investments, of course, which will bring about sustainable development in the country?
Okay, as CIBN, we engage with our stakeholders like CBN, like the Ministry of Finance, and of course the banking industry and the economy in general through our various knowledge events that's organized by the CIBN Financial Center for Financial Studies, CFS. And we organize breakfast sessions and roundtable discussions on topical and emerging issues in the industry. In fact, in 2020, the CIBN has just launched what we call CIBN Advocacy Dialogue Series, which speaks to such issues and is typical of topical and emerging issues are discussed. And of course, we believe that the banking community will be better for it. And we have heard 3 of that, even during this lockdown, using the virtual platform to do that. And we continue also to conduct research projects on relevant issues with findings and recommendations detailed in a policy paper, which is also widely disseminated. And of course, our conference that is coming up, as usual, after the end of the conference with different speakers from all over the world, we will come out with a communique that will be sent not only to the CBN and the policymakers, but also to the entire world, because we publish them in widely read newspapers and other journals all over the world.
President of the Chassid Institute of Bankers of Nigeria, Mr. Bayo Olugbemi, thank you for speaking with us this morning. Now we'll see what's happening at the London markets plus the debt and currencies market in just a moment. Please stay with us. Let's head now to the UK, where Juliana Olayinka will be telling us what major headlines are making the rounds this morning. Good morning, Juliana. We have Prime Minister Boris Johnson is expected to give further details at a Downing Street news conference later today about the latest COVID-19 measures, where social gatherings of more than 6 people will be illegal in England from Monday. What else will PM Johnson be speaking about?
Good morning, Busy. Well, that's all he will be saying, and it's worth focusing on that because, of course, this has serious implications for the entire constituents within the country who have been used to having family gatherings, finally being able to go back to relative normal. And, of course, now this is going to be reversed. We are expecting a press conference from Downing Street, as you said, and the Prime Minister will be flanked by 2 individuals who were right by his side during the beginning of this lockdown, the Chief Public Officer for Health, Sir Chris Whitty, and the Chief Scientific Officer, Sir Patrick Vallance. Over the past couple of days, we have seen an increased rise in infection, over 3,000 daily positive infections in the UK. And at the peak, even though it was 100,000, we haven't seen anything like this since May. And because of the contact tracing, we do know that this is largely due to 20-somethings and 30-somethings who perhaps are hopping from bar to bar. And even though they're not getting themselves incredibly sick, they're still surrounded by the elderly and the frail and people who should be shielding. And there are concerns that this could be going out of control. Britain always knew that we were a couple of weeks behind France and Spain, and we've seen a rise in infections in Spain, 15 times what it was, and we also are seeing a creep in the death rate. So Boris Johnson desperately wants to avoid that because we know that we were so badly affected during the springtime, and it's getting much colder here in the UK. So these precautions are being taken very, very seriously. This is the first time that Prime Minister Boris Johnson has backtracked or reversed lockdown restrictions, and there are some major concerns amongst business leaders this morning that there could in fact be a nationwide lockdown, similar to what we saw in the local lockdown with Bolton yesterday, in giving Brits a curfew between the hours of 10 p.m. and 5 a.m. so you won't be allowed out of your house. But yes, this is a major story.
And then, while many are calling for the extension of the furlough scheme, there's someone on the other side of the divide, and that's the Bank of England's chief economist, who has warned that is warning the government against it. What are his reasons?
Well, his reasons are the same reasons that we've been discussing over the past couple of weeks, and Andy Haldane, the chief economist, is echoing the sentiment that we've already heard from the Bank of England Governor Andrew Bailey, from Prime Minister Boris Johnson, and from the Chancellor Rishi Sunak. In fact, Prime Minister Boris Johnson yesterday once again stated that the furlough scheme will not be extended, that when it comes to an end at the 31st of October, there is the furlough job bonus, where every employer every employer that takes back an employee will be given £1,000. There's also the Kickstart scheme. Billions have been put in that scheme to retrain and scale up the prospects for young individuals. Andy Haldane yesterday was speaking on a podcast with City AM, and he basically was saying that by extending the furlough scheme, you're just prolonging the inevitable, which is the fact that some businesses just won't be able to bounce back, and some jobs will be made redundant. I think we've heard this constantly, and yes, Andy Haldane is just stating what the government and the Bank of England have put on the record.
Now, let's talk about Amazon, Juliana. The online retail giant says key UK business paid just 3% more tax last year, despite a 35% rise in profit. And the group is saying that potentially higher corporation tax bill was offset by infrastructure investments. Could you help us to make more sense of what this is all about?
I'll try this. You're probably better at crunching this down than me, but really this is an old discussion that's been going on between not just Britain, I would say Europe and Silicon Valley tech giants. A lot of Treasury senior individuals believe that these online stores are getting away with paying less tax. There are so many loopholes that they're able to jump in, and therefore they're not paying enough tax. So it's recently been revealed that last year, Amazon paid just £293 million of tax. Sounds a lot, but of course it's a $1 trillion company. And in the year before, they paid 220 million. And between 2018 and 2019, that's only a 3% increase, whereas revenues increased by 35%. So there are some that do believe that Amazon should be putting more in UK coffers. Amazon have responded quite sharply, really. Of course, last week we were speaking about the fact that they took on a further 7,000 UK workers to work within their vast empire here. A couple of months before that, they took on a further 3,000. And they have said that in the past 10 years, they have invested about £23 billion into their business in the UK economy. And the UK has benefited from that. But this is part of an ongoing discussion. As I said, there are so many new digital taxes that the British government are trying to impose. But of course, this is all to the behest of US President Donald Trump, who feels that the US is being unfairly targeted, because we know that Silicon Valley is where most of these tech giants are, and that falls within the US borders.
Thank you, Juliana. We'll see you again in the afternoon.
Thank you.
Let's get back to Temple for a review of the debt and currencies market.
And basically, let's wrap up right here with the markets quickly. The market yesterday with bonds, we saw a second consecutive day of gain. Buy interest really continuing on this side of the market as investors indicated interest in the March 2024 paper, where we saw a bit of a contraction at the end of the day given the interest. But if you look at the 2027 paper, and the 2037 paper, I should say, there was a bit of expansion there, which is at the longer end of the curve because of the cold shoulder that investors are giving to that side of the space. NTB space yesterday, we saw a bit of a 1.02% decline in the yield. At the end of the day, we saw some interest as well in the 51-day paper, which will be represented here by the 29th of October security. That's at the shorter end of the curve. And of course, the 114-day to maturity paper. Open market operations as well got a bit of interest yesterday. Investors, dealers generally are looking at this space at this point in time. Quickly, before we go, we have Akweve Putu joining us via phone right now. She's a fixed income dealer with Access Bank. Thank you for joining us this morning. But we know that yesterday, oil price contracted by some 5.83% or thereabouts. Do you think that is going to change the buy-side pattern of the market that we've seen since Monday today?
Good morning. Thank you for having me. So the current oil prices haven't really affected what we see in the fixed income market. The fixed income market is actually driven by the liquidity that's in the system right now. There's been a lot of maturity coming to the system, but there hasn't been a corresponding mop-up by the FX banks. So even though for last week we saw about 350 billion coming to the system from normal maturity, we only see 100 billion being mopped up. So it's a case of demand and supply right now in the fixed income market. There's a lot of liquidity in the system. Even as of today, the system opened with about 480 billion naira, and we see the money market rates trading around 1.3 and 2.1% levels, respectively.
So what's your outlook for the trading day as everyone expects the Cibn MPC to hold later this month?
Okay, we still, for now, we still see the MPR rates being sustained. The CBN has tried to keep rates low in the market, trending to 1 digit now. They've actually tried to stabilize the economy. They came up with a circular recently for even the savings accounts to trend lower than 10% level. So they're actually trying to maintain the low interest rates in the market. The OMO bills are still trading at single digits. The longest tenor trading around 8.94% at the auction, OMO auction, and we still see the bond yields at those one-digit level. Don't expect any change in the MPC meeting that's scheduled to hold this month. We think every other paying parameters will be sustained for now.
All right, Akwevo Oputu, fixed income dealer with Tier 1 lender, Access Bank. Thank you for your insight on the program. I appreciate them. This is back to you now.
Thank you, Temple. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.